The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. Welcome to your live market update and charts of the day for today, and Monday, the 28th, is it? Somewhere around there. I hope you're well. Hope you had a great weekend. Wonderful to see you. 24, of course it is. And we're delighted to see you all here. Thank you very much for popping in, whether you're watching this live on GoToWebinar, live stream on YouTube, or catching up later on YouTube. It's wonderful to see you all here, as always. Really important message to share to start the game off, and just to remind you, this is for educational purposes only. Please remember to do your own due diligence on anything you see here. Make sure you follow trading plans and make sure you manage risk on every trading action. Really important message. Make sure you trade always with your within your own personal financial situation and underpinned by your personal trading objectives. Thank you very much for your heads up on the AV wing. Good to see you here, mate. G'day, Mark. Hi, Rob. And g'day, Hugh. I hope you're all well. Thank you very much for saying hello. It's always really appreciated. Likewise with you guys who are saying hi on YouTube. Thank you very much indeed. Right. Okay, let's get into some headlines, shall we? And then we'll sort of unpick those and then we'll have a look at some charts. So we saw a little bit of a bounce on Friday, but it was the worst week for global markets since April's Liberation Day. We do have a shortened week with Thanksgiving Day on Thursday in the US, of course. May make markets a little lesser volume, really. We may see some positions closed on Wednesday. On Wednesday, we do have some plethora potentially of key data that is due to come out. We'll check that out in a moment in more detail. We've got a positivity. The ASX has actually jumped into around this. It's up around about 0.8%. European futures pointing to a cautiously positive open. The US dollar index is trading around about 6-month high on rate cut doubts, and gold could be what I'm calling coiling for an upside potential move. We'll check out charts of that. Copper remains range bound, and oil, after further weakness last week, is eyeing 4-year lows. Bitcoin continues to capitulate. We did get a little bit of a bounce yesterday in weekend trading, but it's down over 30% in the last 5 weeks. Who would have thought when it was kissing 124,000 that it would be down to 80, just 80 over at the end of last week. We do have a smattering of final earnings. We've got actually 95% now of the S&P 500 reporting, so it's just the final stragglers, mostly in the retail space. Mostly in the retail space. We do have, as always, an eye on what's happening in the US government and trade news. On top of that, as I said, there's quite a chunk of data coming out. We had US PPI. We've got weekly jobs, preliminary GDP, and retail sales all coming out this week before Thursday. And we've also more locally got the Australian CPI number on Wednesday. We're pretty well locked in for nothing happening in terms of the RBA for their meeting on the 8th of December. Sort of a quick look at the RBA rate track and see where it's at, but it's 91%, I think. Look here, yeah, 94% chance of no rate cuts, so no pre-Christmas fund from the RBA. In terms of also on the interest rate front, it's worthwhile checking out the one of the stories of last week, really, and one of the reasons why markets looked a little bit weak was the expectations now about a Fed rate cut in 16 days' time. You can see there that it has actually jumped again. That's interesting. So this was, you can see here, really all over the place. So that 350 to 375, if we look a week ago, was down to 44%, but we have seen a significant jump in that. So now a 70% chance of a rate cut. That's certainly a big swing to the upside. But if we look at where we were a month ago, we're expecting 90%. We dropped down to 45%. I think at its low it was around about 38% towards the middle of last week, and then jumped on Friday. So interesting. The Fed, it's really, really unclear what the Fed's going to do now. Certainly, there'll be, if there's not a cut in December, there'll be January, but it now looks as though the market's starting to price in a higher probability. I did mention data. Let's have a quick skim across the data front. You can see they're very quiet today, nothing much going on. It's a bank holiday in Japan, of course, as well. Tomorrow we've got final GDP numbers coming out of Germany, but because it's the final GDP, not likely to shift much from what's expected, which is flat. The highlight of tomorrow is the core PPI and the retail sales, if those are actually released. And then, as I said, Wednesday is another day, really, across the board. We've got Aussie CPI, which is expected to hold over that 3% fairly comfortably. Got the Reserve Bank of New Zealand with its interest rate decision on Wednesday. Also, there is expected to be a 0.25% rate cut. We've potentially got some weekly jobs numbers due on Wednesday as well. Usually theirs are released on a Thursday, but of course it's closed on Thursday. We've got durable goods, which is not insignificant. And that preliminary GDP will be really important if it is released. But you can notice that some of these are sort of tentative. Core PCE price index is an important number as well. And as is the crude oil inventories, particularly with oil testing those 4-year lows potentially by that stage. Likely to be a quiet day, not a great deal going on outside of Thanksgiving Day and Friday. We've got some European data potentially of interest with the German CPI number out, as well as the Euro number as a whole, Canadian GDP, and Japanese CPI finish off. What is a fairly busy Friday. Just watch at the weekend for Chinese PMI numbers. Right, time to check out some charts for you, I think. Just want to check that we're... G'day, Brian and Neil. Hi, I can see you both here. Anyway. Right, charts. Let's have a look at the Nasdaq. So here's the Nasdaq, and this is where we finished the week with a little bit of a bounce. So what picture is now is we found a support level. We're retesting a level that we hit back here on so that's around about the 10th of October. It was resistance, of course, on the way up. So quite a significant pullback in the Nasdaq, not quite in correction territory yet, but if we look at the high on the futures to the low, then it's around about 9%. 10% would be not too far up from where we are now, around about 23,600. So watch that if we continue to see some selling. But it does look as though we might be right for a bounce. We did gap up this morning, and as I said, Europe's futures are looking a little rosy. Let's actually check those out now. As we're meandering along. There we go. You can see the Nasdaq futures slightly to the upside. European futures, they're actually better than they were earlier. So they're a little better than cautiously positive. Commodities looking a little weaker on the back of some USD, small USD strength. So a little selling in gold and copper, and oil looking as though it's looking a bit tricky again. FX markets, apart from the yen to the downside, everything else is looking pretty flat against the USD, which is slightly to the upside. Bitcoin, as I said, is having some buying coming in this morning. Right, let's look at some of the other charts. US dollar index, you can see there, this is highs not seen. Oh, this will be a high close not actually seen since May. So as I said, 6-month highs on the USD. You'd expect gold to be struggling, but if we look at this, we've got 1, 2, 3, 4, 5 wicks out of the last 6 have failed to breach 40.40, so it's looking increasingly like a significant resistance. You can see previously when it did that, it bounced. When it did here, it bounced. So it is a sign that perhaps the selling pressure isn't there to take it beneath. But it is early doors in the session. 40.40 looks important technically. But the fact that we've had this number of wick rejections suggests that we may get a bounce if we do so. Watch for a move over this level here. You tend to look at the high of when we're in this sort of potential wick reversal. You tend to look at the high of the bodies. So 4077, maybe a level of interest worth having a look with. She'll move up there around about $60 to $70 if we get some buying pressure coming in. So it could go either way. Excuse me. Could go either way at this stage, but certainly looking as though there aren't the sellers there to push it. Copper's had a really nice bounce off this $5 level again. You can see again reluctance, much like gold, reluctance to break through and establish support. After a move up on Friday, you can see we're just positive on this futures contract in this morning's trading. We're really struggling. We've sort of given up most of the gain, so we're just left with the gap there that's that was in play on open. I'm not really sure copper looks great technically. You can see it's quite noisy, so within this gap. So really the high probability trade would be if we breach that 512 back on the 4-hourly chart. And then we may get, and then to reach that 512, that's when we may see some more buying coming in, perhaps maybe moving it to around about 516. Oil, as I said, looks weak this morning, looks weak generally. Here's those 4-year lows that we actually hit last mid October. We've been this steady, painful downwards trend channel since the last week in October, and so we do look as though we could come down and test this. That EIA data could be crucial on Wednesday. And as for Bitcoin, here's Bitcoin. A really nice bounce yesterday, but failed to follow through on that in today's trading. So really, well, where we are at the end of Thursday's trading now, just to put this into context, of course, it's worth going on a longer time frame. Sorry, on a further back look at this. So really, 90,000 is significant to the upside, to the downside. You can see quite a lot of price action around this 80,000 level. We did actually test that on Thursday, I think it was. Wednesday, actually. Oh, no. Friday it was. For the weekend. So you can see there, we've come down, tested 80,000, bounced off that. But hardly compelling story at all. So you'd be looking, at this stage, it could quite easily come down and test again. There could be a potential short-term opportunity, perhaps if we breach 83,500, that could send us down back towards 80. On the long side, you wouldn't get interested in this unless it started to test 90. But Bitcoin looks really, really shaky. That's, as I said, down over 30%. Look at the high there. Low there, it was down. It's worse, 36%. At this stage, we're about 31% down from that high that we touched on the 5th of October. Right, let's see if we can find some interesting charts, maybe setting up. Doesn't look too hot, does it? That's the US yen. So despite that small strength in the US, the USD, it doesn't look supported around about this 156.30 level. So around about 70 pips to the upside on the hourly chart. But at the moment we're sitting mid-range. It doesn't look attractive at all. Just a little heads up. Here's the exit manager dashboard, which is looking pretty good. Let's just have a look. Here's our Bitcoin chart. And we can alter stops. We can do partial closes, maximum givebacks, time exits, all that sort of stuff. So really a nice bit of kit that we've been developing. Right, so Euro yen looks sort of interesting. We're going to bounce here on the 30-minute chart. put it on the daily chart for context, and you can see we had that pullback on Friday from highs that we haven't seen forever. So key technical levels on here would be that high that we tested at 180, 150. This pause level that we had prior to this trend continuation around about 179. Those are the two key levels on the daily chart to watch out for. And so if we look at the hourly chart, what we've got is a really nice bounce off this lower support, let's say 180. It's a nice round number. And you can see there we've got some buying coming in on the daily chart. In the first instance, there could be a move up of around about 40 pips to retest this high here. Yeah, this is a range identifier indicator that we put together. But so 180.70 is not actually a bad call on this. That chart looks interesting. Let's just have a check-in on free and greed index. Let's see what's busy. Let's just get rid of this. There we go. So, I want to have a look at the Aussie yen. So Aussie yen looked as though it had promised there for a little while. If you just put this on a line chart, I looked at this earlier in the day. It looks like a sort of reverse head and shoulders type of pattern in terms of sentiment, but I'm just sort of not liking it. I think this 101.33 is an important level to put it back on the candles. Some work to do on this. Doesn't look as though it's got any appetite at all to test this, never mind breach it. So Aussie yen isn't one that's jumping up and down for me at the moment. Let's just have a look at the euro kiwi. You can see we have now got a fairly established support that kicked in on Friday and has continued today with somewhat of a reversal there. This looks like an important level here. You can just sort of see that was the top of this, really that first candle, the opening price of around about 205,327, but hasn't really came down, retested that 205 level, and then bounced again. So we are stuck in quite a range here of around at 32 pips, and it just looks noisy up above. Don't like it, really. Euro USD, nothing much going on with that at this stage. You'd need a breach of either this level at around about 115, that's our number there, or this level, really to make it worthwhile at around about 115.45. That might be a high probability trade to check in on once the European markets open, see if it's edging towards that possible 30 pips to the upside on that. But really, the best chart that we've had a look at is possibly this. It's possibly the euro yen. See some more buying coming back in, so it looks good right now for around about a 40 pip move up to 180.76-ish. Onto the ASX, a little bit of a bounce in some ASX stocks today. Also a little bit of a battering for some as well. But some of the stocks that had a hard time last week are looking okay. We liked lithium stocks last week, but then they pulled back. You can see there that retracement, so we'll be waiting for a move to the upside on that LYC. We've been talking rare earths quite a lot. But you can see again, last week was just so messy. We got that retracement on Friday. We're going to bounce up again. This could be interesting if you just put it on a line chart. I'd be looking for a close really over maybe sort of this 1580 level. So it's got some work to do right now. We tried to breach it on Thursday before we had Friday's pullback. It failed to hold it. Ended up down at 1570 again. So that is possibly worth just keeping half an eye on. to see where it sits. Let's put on. I might actually look at Fear and Good Index. You see there? Let's just put this on daily chart. There we go. I look at also in that rare earth space. Again, we had that sort of pullback on Friday. The best that we can say about this group of stocks and lithium, and is really reminiscent across or relatively consistent across all of the ASX, is that we've had this pullback. We look as though we're supporting. We're up around about 1% at this stage. Actually, let's check out that. Really nice bounce on. This is probably the favorite chart that I've been looking at. Let's just see where the ASX is sitting right now. Is it still holding? Yeah, it's still pretty well near that. It hasn't moved much since open. It's still pretty well near that percentage to the upside. Fairly across the board. Tech are doing particularly well this morning. So like 360, I like this. It's bounced very well. You can see the low point of this candle correlated with a resistance back here from May through to July before we had this significant run to the upside, which this was chart of the day several times actually. But this bounce looks significant. It's back to its 200 MA. The line I'd be keeping an eye on would be this $40 mark. If we breach this, we've got a gap to fill up to potentially 45. Let's say 44. So just a little over 10% there. So that's one that I think is very strong, worth keeping an eye on. If we look, I don't want to take that at this stage. What else do I want to check out? EVS we sort of looked at as a potential bounce candidate as well last week, and you can see it's doing that just a little bit too early, probably 285. Might sort of get interested in that. Megaport's having a nice bounce along with much of tech this morning, but really this is on the back of a fairly dreadful sort of couple of weeks for Megaport. You can see there it came down and tested 1160, which was the low not seen. This candle here was back in August. And we do have a support there, which does seem to have bounced off. This appears to be a really important level at $12. So the bounce off this is significant, but I'm not sure there's enough in that to make me excited at all. I haven't looked at Webjet for a while. How's Webjet doing these days? Struggling a little bit. Yeah, we're still looking at lower highs there. So even though we have a bounce, it just may be a continuation of that downwards trend channel. So actually really difficult to find a stock that's jumping up and down saying this is where the buyers are. Zip, so it's consolidating. So yeah, I mean, this is often what you get after a significant pullback. Wise Tech, again, downwards trend channel. Not happy. So I'm going to just plant my flag in 360 ASX. I think that technically is a strong bounce. I think you're still going to be patient with that. Keep it on your radar. I don't think it's going to happen today, but $40 may be a level just to keep on your radar over the coming days. Worthwhile popping into some of the US stocks. Let's just check out some here, which are obviously battered all over the place. Light we really liked last week. This was one of our charts of the day. You can see there it continues to look good in the lighting space. 261 was the level that it was its previous high, and it breached that on Friday. It's looking very strong indeed. Airlines were catching my eye, but it wasn't LUV, it was Delta that I was looking at. Carnival, I said watch for a bounce, but that's too early as well. Delta was the one we were looking at. So Delta bounced off. The 200 MA, really nice technical level. And you can see that bounce is heading back up to what I think is probably a a good level, around about $42, sorry, $62. So worth keeping on your radar for the remainder of the week. Oops. Micron Technology is having a nice bounce as well. Let's just bring this up a little bit. You'll see there. So we're having a bounce off an established level there around about 200 again. High risk trades these. I'm not sure I'll be enthused about it. And let's check some of the big boys. Let's check on Nvidia, which is down around about 1% today, all over the place with Nvidia at this stage. But really what it's done is it's come down, tested that key level again. It's tested it multiple times now, so we haven't quite busted out of this range. We rejected a move through on, that's extended hours trading, isn't it? It's today. No, it won't be actually, it's Monday. I did on Friday, just checking on that. Yeah, so Friday's, you can see Friday's candle here. If we look at the candle on Friday, we've got this test below and again, push back up again. So it does look fairly, this is a really important level. 180, a bounce up over 180, 182 could see us back up to retest 200. Too early to make any assumptions. So it's really difficult to look past LIT. Oh, sorry, LITE. We will have just a quick look at where is it? This is one we've been keeping an eye on. It's just the rare earths. It looked as though it was going to pop. We liked it on the bounce of this $62. It's the rare earths ETF. Moved up. Thursday was a bit of a rotten day, but it was for a lot of, some particularly in that resource sector. Bit of a bounce today. Now we're sort of waiting for a breach of 73 to potentially move up to 82. But I still think that may be worth looking at in the medium term. That rare earth space isn't going anywhere very fast. So there you go. That's my stuff for today. I hope that's been interesting, useful. I'll give you a few things to have a look at. I'll see some of you tonight on an EA session if you're part of that gang. Otherwise, watch out for Charts of the Day on YouTube and watch out for Wednesdays in a Circle. And of course, we're back here to do this again on Thursday lunchtime. Most of all, guys, have a wonderful week ahead. Yes, I am happy about what happened in the North London derby yesterday. It's nice to see my boys doing business. You're remembering. Anyway, nice deviation. So anyway, trade safe. You know where we are if you need a hand with anything, and I'll see you all very soon. Rob, well, you know where I am. I know there's a bit to catch up on, mate, but that's all good. Just ping me a little message, and I'll fill you in on what's going on, what's not going on, all that sort of stuff. We'll see you later. Take care. Bye bye for now.